Hi, and welcome to Market Conversations. Just want to do a quick video on First Republic Bank. The ticker is FRC, but before I continue, just want to let you know that I am not a financial advisor. This is just for entertainment purposes. On Friday, the stock closed at $3.51 and actually sold off after hours because there were news that it was going to enter into receivership. If we take a quick look at just a 6 months chart, you can see that the stock was once over $100. It sold off and it consolidated for quite a bit from $10 to $15, and then earnings came. It just sold off from there. And people started to pour into FRC just because it dropped so much, hoping that there would be a bounce back to possibly $20 or $40, and that it wouldn't collapse like it did with Silicon Valley Bank. But yesterday, JP Morgan bought FRC, and FRC stock got halted pre-market. And I have experienced something similar with Silicon Valley Bank. I had bought $6,000 worth of shares the day it was halted. The bank got shut down, the stock got halted, and it got suspended for 3 weeks before going to over the counter. I never saw the $6,000 ever again. And it's unfortunate that retail investors are losing a lot of money with some of these stocks that was meant to be safe. First Republic Bank was the third largest bank to collapse. And if we take a look further out in time, this bank was once a $200 stock, and it just plummeted. And it happened so fast within a month, and now it's going to be delisted. So a lot of people lost a lot of money. Once it gets delisted, and hopefully it does go to OTC, and you can possibly recover maybe a few $100s, because I just want to show you what happened with SIVB. So you can see SIVB closed at $39. It was once a $700 stock, and before it collapsed, it was over $200. So it's no longer trading on the New York Stock Exchange. It's now trading OTC under the ticker SIVBQ for 48 cents. It's so hard to make money in the stock market, and sometimes it's so hard to stop ourselves buying into these very volatile stock. But then again, did we know that these huge banks were going to collapse and that shareholders, retail investors were going to be left with nothing? And that's just how it is with the stock market. I learned the hard way that nothing is safe in the markets. Just because a bank is the third largest bank, there's still a chance that it will collapse. I feel bad for the people that invested in these stocks. First Republic and Silicon Valley Bank. I myself lost over $7,000, $6,000 on Silicon Valley and $1,000 in our FRC. Thankfully, I didn't put more into FRC. I was going to, but then I thought about Silicon Valley Bank, and also I'm in Bed Bath & Beyond, which is going to get delisted. So you have all these stocks that are either going to get delisted or going under, and it's just trying to survive. It's so hard to know which stock to get into. I think the best thing to do is just buy the SPY tech stocks, because they're not going to get delisted anytime soon. I'm going to share an article from yahoo.com. Let me know in the comments if you bought into FRC and what your plans now going forward. Investors face wipeout. JP Morgan Chase purchased First Republic Bank in the latest fallout from the collapse of Silicon Valley Bank. While JP Morgan CEO Jamie Dimon said Monday that the crisis is over, the same can't be said for First Republic investors. JP Morgan did not assume First Republic's corporate debt or preferred stock, meaning institutional investors will not be made whole. Neither JP Morgan nor the Federal Deposit Insurance Corporation have explicitly said what the purchase means for First Republic common shareholders. Those shareholders are not expected to be made whole either, though. according to the banking equity analyst team at Wedbush Securities. We expect a wipeout of common shareholders following FRC entering receivership and being sold to JP Morgan. Wedbush Securities analyst David wrote in a note to clients on Monday. After entering the banking crisis at $115 per share, First Republic stock stopped trading on the New York Stock Exchange at $3.51 on Monday. Regulators seized First Republic early Monday morning and sold the majority of the bank's operations to JP Morgan Chase. JP Morgan Chase acquired $173 billion of loans and $30 billion of securities in the deal. The largest banking failure since 2008's financial crisis came less than a week after the company revealed deposit losses exceeding $100 billion in the first quarter. Since FDIC seized the bank, investors would need to file the grievances with the agency. Stockholders can file a claim with the FDIC to seek payments for the shares via an online portal or email. But on a new FDIC webpage answering questions for those impacted by First Republic's failure, stockholders are listed as the fourth and final group of creditors to be paid out. Depositors, general unsecured creditors, and subordinate debt would be paid out first. All of those claims will be paid out after administrative expenses, according to the FDIC. The First Republic banks themselves are still open for clients and operating as normal.